Software companies exist to solve problems. For most of us, it's easy to understand these problems and the companies that try to solve them. That's because such companies usually develop products that users like you and I can interact with through an app. However, for a particular type of software company called an API company, it's a little different. You see, API companies develop products that most of us are unlikely to ever interact with. Well, at least not directly. This product is called an API, short for Application Programming Interface. In recent years, the software companies that build their businesses around APIs have grown not only in number, but also in impact. And nowhere is this growth more evident than in Nigeria's emerging fintech scene. In 2020, Nigerian fintech startup Okra announced that it had raised $1 million in pre-seed funding. The announcement was remarkable in more ways than one. First, Okra was a young company, only about 4 months old at the time, and it was already raising the kind of money that companies several years older and more established struggle to raise. Second, it was co-founded by a black woman, Farah Ashiru Jitubo, and black women have historically found funding hard to come by. Since then, Okra has gone on to raise even more money. In 2021, it received an investment of $3.5 million in a seed round. The third and final reason why Okra's growth was remarkable is that it's an API company, and this type of company was and still is a relative novelty. To be more precise, Okra describes itself as an API, quote, super connector, unquote, that exchanges real-time financial information between customers, applications, and financial institutions. According to Jitubo, the idea for Okra was born when she returned to Nigeria after giving birth in the United States, pardon the pun, and couldn't find a company that provided her with a similar set of personal financial management services to Mint, a service provider she had grown accustomed to. Mint is a software company that helps users with financial planning and expense tracking. And during her stay in the States, Jitubo became one of its users. When the new mom returned to Nigeria, she tried to connect her Nigerian bank account to Mint, but that didn't work. Frustrated with the prospect of life without her new favorite personal finance app, Jitubo recalls telling herself, quote, "My financial literacy could never grow here." But what Jitubo didn't know was that moment was going to be her eureka moment. Shortly thereafter, she made it her goal to build a company that would make a service like Mint possible in Nigeria. Here's how Mint works. It enables customers to manage their finances by linking all of their bank accounts in one place. That linkage is facilitated by connectors, just like the one that Jitubo would go on to build. These connectors gain access to customer data contained in their bank accounts, and using technologies like open APIs and open banking, they securely share this data with companies like Mint. But before we go any further, let's do some jargon busting, shall we? And explain what open APIs, open banking, and even APIs actually mean. To understand things a little better, picture this. If you go to most open markets in Nigeria and you want to buy a pair of jeans, chances are that you will find a roaming agent who's unattached to any shop but has agreements with several. You can tell that agent the color, the style, and the size of the jeans you want. They will then go into those shops and get different jeans for you to check out. When the transaction is done, you'd have gotten your jeans with without the inconvenience of going through each and every shop in the market. The shop owner would have received value for their jeans, which they might have not gotten without the agent making that connection, while the agent also gets a cut for their troubles. That's the value proposition of open APIs. Everyone stands to benefit something. In this example, the buyer is the app for any company providing a financial service. The shops are the banks or financial institutions. The customer information they hold is the jeans, while the agent is the API company. Most users will only ever interact with the buyer, just like Jitubo did with Mint, while the API company, like the one she co-founded, works in the background. The API company retrieves information from the financial institutions. This information is then fed to the apps, who then feed it to the end user. By granting third-party access to their customers' information, the banks or financial institutions are making use of open APIs, and the API companies that are plugged into those APIs aggregate customer data for other companies to use. The concept of open APIs can be employed in many use cases. One use case is banks granting third-party access to customer data. This is known as open banking. Open banking can be seen as a subset of what is known as open finance. That's because any financial institution, banking or non-banking, can give third-party access to their customer data. For instance, an investment company can give other companies access to their customer data. But of all the use cases for open APIs and open finance, open banking is arguably the most popular. It's also the most standardized. Regulators often seek to oversee the entire process I just described, making sure that everyone, the banks, the API company, and the service provider speaks the same language. And this is important because without standards, that interaction can easily become disorganized and disorderly, pretty much like an open market in Nigeria can get on a very busy day. But more on open banking standards a little later. Another Nigerian startup that's creating real value is Mono. A few months after Okra's pre-seed funding announcement in 2020, the company announced a pre-seed funding round of its own, an injection of $500,000. This news came after less than 2 months of operations. In the ultimate sign of validation for a startup, shortly after the pre-seed investment, Mono got accepted into the prestigious Y Combinator and received a further injection of $125,000. In 2021, Mono would get even more investments, raising $2 million in seed funding and a further $15 million in Series A funding. That's a little over $17 million in just 1 year of operations. Remarkable. Mono says that it's building the, quote, Plaid for Africa, unquote. Now, this analogy is important because Plaid is widely regarded as a global leader in open banking and open finance. According to the company's global head of policy, John Pitts, and I quote, Plaid is a financial data network that acts on behalf of consumers to empower them to retrieve their financial data from wherever it's being held and share it with another entity who's offering that consumer a better product, a different choice, or some other service that the data is necessary to power, unquote. One example of this is an end user giving Mint access to their financial information through Plaid's APIs. That way, the user can take advantage of Mint's services. But this process isn't always as straightforward as it may sound. You see, Developing and maintaining APIs can be difficult and resource intensive, so much so that many financial institutions struggle to see the value of refactoring their entire software architecture to be more API centric. And even when they do, they are often reluctant to open up their API infrastructure to give third-party companies like Plaid access. So, for many years, Plaid took a shortcut, and that shortcut was using a technology called screen scraping as an alternative to API connectivity. With screen scraping, a customer gives Plaid their username and password through an interface that mimics that of their bank or financial service provider. Then, through its software, Plaid logs into the actual application as if it were the customer, scrapes their data, and pastes it into their own platform. This is called data aggregation, and companies like Plaid are also known as data aggregators. These aggregators play an important role. Should a company like Mint want to access the user's financial data to extend some sort of financial service, such as personal finance, to them, Plaid can easily provide this access. Now, if screen scraping sounds untidy when compared to open APIs and API connectivity, it's because it is. But it is important to note at the same time that the practice is largely legal and companies like Plaid aren't doing anything that's explicitly wrong. That said, it's pretty hard to deny that there are security and privacy concerns with giving your login credentials to a third party. What if that third party goes rogue? What if that third party suffers a data breach? And so on and so forth. There's also the issue of full transparency. Plaid obfuscates its behavior from users by replicating their bank's login window and making it appear that the user is logged in directly into their bank. Now, because of this obfuscation, for several years, the company was criticized for its screen scraping techniques and usage of consumer-provided bank logins. This also caused relations between traditional financial institutions and Plaid to become strained. Some financial institutions went as far as suing Plaid, while others played a game of cat and mouse by regularly turning off or blocking the service Plaid and other third parties were accessing. Now, circling back to Mono, the Nigerian startup seems to have taken a little too closely after the Plaid model and has been accused of using screen scraping technology as well. In 2021, Mono announced new integrations with local investment apps. It was an exciting development at the time. What it meant was that end users would be able to use their investments in those apps as some sort of collateral when trying to get a loan from another one of Mono's partners, for instance. But in a twist of events, the company was left red-faced after a couple of those apps, such as Chaka and Bamboo, distanced themselves from the Mono integration. In a message to their customers, the investment apps raised some of those security and privacy concerns that we talked about earlier. With that denial, it became obvious that the integrations between Mono and the investment apps weren't done through open APIs, because if it was, then everything would have been done above board and Chaka and Bamboo wouldn't have those concerns. This forced Mono to open up about how their technology truly worked. In a lengthy blog post, the company highlighted its integration with Carbon, a digital lender that it evidently had a better working relationship with than the investment apps. Now, an example that Mono highlighted: if you, a user, want a loan from Carbon might need data from your bank to determine your eligibility. If you log into the Carbon app, you'd be required to select your bank, share your credentials, and give Mono access to the data that your bank holds. It's the same for an investment app. If there's data that Carbon needs from the bank to again determine loan eligibility, you as the user could give Mono access to the investment app by sharing your credentials. Again, this is no way illegal, and the Central Bank of Nigeria (CBN) doesn't explicitly ban screen scraping. But nevertheless, the disclaimer from Chaka and Bamboo was a real wake-up call for Mono, and the company has been forced to do two things since then. First, to be more upfront with its customers about its technology choices. And second, to cultivate a better working relationship with the financial institutions that it seeks to connect with. Now, for Plaid, part of the shift to a better working relationship with those institutions has been to convert as many of their connections to APIs as quickly as possible. The company was aiming to have 75% of its traffic committed to APIs by the end of 2021, although there is no word on whether or not it met the targets. There's also no word on whether Mono has set similar targets of its own, but the company has launched a raft of new products and partnerships that could be taken as a signal of its intentions to make a similar transition. The third and last fintech API startup that I'd like to discuss is OnePipe. Founded in 2018, OnePipe is the oldest of Nigeria's three fintech API companies and the one with arguably the greatest emphasis on standardization, best practices, and partnerships. OnePipe's original game plan was open banking, that is, to create an API gateway that connected banks and fintechs under a uniform platform. Its founder, Okra is a trustee of the Open Technology Foundation, OTF, which is a non-profit organization that's driving the development and adoption of open banking standards in Nigeria. Utilizing some of those standards, OnePipe established API connections with a handful of Nigerian banks that agreed to partner with them. But according to Adeoye, those connections didn't generate the kind of transaction volume that the company was expecting, and this low volume slowed down the company's growth. Unlike Okra and Mono, which took the aggregator route and started attracting investors almost from day one, it will take OnePipe a couple of years to raise $120,000 in pre-seed funding. You see, the success of any open banking startup depends largely on spread, that is, having connections with practically every bank. But because of the challenges of building and maintaining standard APIs, that's why aggregators use screen scraping as a shortcut. Adeoye puts it best, quotes, "If you go for data aggregation or open banking in general, then you are going for breadth, not depth," unquote. When his startup reached a critical point in its growth path, rather than resorting to similar tactics, OnePipe chose to deepen its relationships with the few banks it had established a partnership with. The company started to manage the API infrastructure of its partner banks and provide an API connection for just about any company to build its services on top of. With this pivot, OnePipe seems to have finally hit the sweet spot between high standards and sound business. In 2021, the company went on to raise $1 million in further pre-seed funding and $3.5 million in seed funding. According to Adeoye, quote, "We raised a round last year to focus on one use case of the partnerships, which was to pull together the APIs of a fixed set of banks and offer embedded banking or banking as a service play," unquote. Now, that's another buzzword that's become popular. But Adeoye explains what it means. Meaning, and I quote, we make it possible for non-financial institutions or businesses in general to offer banking services to their customers, unquote. Now, all three leading fintech API companies, OnePipe, Mono, and Okra, are growing at an incredible speed, and regulators, as expected, have started to take notice. In 2018, the CBN's Deputy Director for Banking and Payment Systems, Musa Itupa Jimo, made a statement that has now become key to open banking conversations. He said, and I quote, banks are sitting on a huge amount of data, but they are not doing anything about it. Sidebar, remember what I said about genes? Anyway, let's go on. According to Jimo, quote, CBN is looking at how to raise the standard for all banks and fintechs to plug in, unquote. In 2021, the Apex Bank released a regulatory framework to standardize open banking in the country, and this framework is important. While the ability to share financial data is changing the face of banking and finance as we know it, it comes with its own risk, some of which we have already touched on. Regulation mitigates these risks and provides guardrails for everyone involved. The framework from CBN is just a draft, but it's a step in the right direction. After all, it's still early days for open banking, open finance, and embedded finance. But early days or not, the combination of progressive regulation, fast-growing startups, and forward-thinking financial service providers is sure to fuel the explosion of Nigeria's fintech API economy in the months and the years to come.